Good day, all. Ira Epstein of Linn Associates with your morning flash update, and this is for Thursday. It's hard to believe we're at Thursday already, the 16th of April, 2020, and we're at 9:20 a.m. So we saw the numbers come out on the unemployment, and simply put, it's just over 5 million. That brings the unemployment rate probably to what, about 13%. The stock market broke on it, but not all parts of the market. If you'll notice, the NASDAQ is a standout here. And again, I'm going to remind you, the market seems to like these FANG stocks, different parts of the technology sector that have been going, and you can see that's at work, but the other parts of the indices definitely on the rough side. And I pointed out something in my morning subscriber video to my paid subscribers. And I said, we have to consider that as we get these employment numbers, they've replaced temporarily the FOMC meeting, what they're doing. They act like it, but we get them every week. That's the difference. So as we're getting them every week, the market's looking to see, oh, things are worse, things are better, oh, they're whatever. And that was the reaction. At first, the reaction was because it was so close to the estimates, the markets went up, but now the market's rethinking things. They had the unemployment data, they got the housing data, and I'll show you all this in a while. We're taking a look at the metals. They're still up, and copper's staying up. That's not bad news. I'm concerned of what I'm reading, though, in China, where they are saying that there are problems, that the factories don't have enough demand. Well, Europe's closed, America's closed, Asia's closing. They're about to issue an order in Japan countrywide. So they tried it in a few of the major cities. As they shut in the emergency action, they're about to go countrywide now because they're picking up a leg. South Korea's done real well in controlling things. In the grain markets, you're still under pressure, especially the soybean market. You're getting bids in the bonds and the notes. Why? Unemployment at 13%. What if we get another 5 million jobs next week? Are we going to kick unemployment up 15, 16%? That is what we're looking at. So those are the type of things the market's dealing with. This afternoon, well, actually, it's 9:30 this morning. I don't know why I said this afternoon. We're going to get the EIA numbers. They are looking for the report to show an increase in the billion cubic feet of 65 billion. That compares to the 73 billion in the year earlier and 27 billion average over the past 5 years. So it's still 3-4 times the average. Jobless numbers, they were at 5,245. That's what you look at. The continuing claims went up by 4.53 million, so we knew this was not going to be good. And I'm not surprised at the Philly Fed Business Index. Why? Because we just saw the New York Empire State, and it was a disaster. Well, this is going to be a disaster too. All parts of the region's just getting smashed. We know this. Until we see that people can leave again, we'll probably stay in numbers like this. Maybe this is the worst hit we're going to get at this point. Then the housing numbers. Well, they can't be good. And they're not. You're down in the starts, 22%. The permits are even down. They expected permits to be up here to the 4.5%. They're down 6.8%. But understand what this means. It means housing is probably in the latter part of this year going to be one of the driving forces of the economy. People will want residences. People will get jobs back. Things will change. But how do you deal with it right now? Everything that can go wrong right now and everything that should be weak is weak. That's the way to look at it. One of the things that is really taking off for me is my new Spider ETF video. People really like this. It comes out at about 4 in the afternoon. And what I do is I'm covering 27 different charts on these Spider ETFs. So it's all the major spiders. Then I'll go into the currency ETFs. I'm going to go into the pharmas. I'm going to give you the metals, be it the gold miners. And I add to this all the time. Right now it's 27 charts. And the reason I do it at 4 in the afternoon, Chicago time, market's already closed at 3 o'clock. So I'm able to get that one out early for you. And the idea is to give you, maybe if you're losing some confidence, gee, I'm wondering if this chart pattern makes sense to somebody else. That's the whole purpose of it. That is what I'm doing. So if you're a regular watcher of things I do, well, now I've melded, if you will, the futures markets and the Spider ETFs together. You're going to get the fundamentals at the end of the day, ideas on what I think for the next day is your point of entry, exit, what I think the pros are doing in the markets. And the charts will look like this. They have a different look than you see here. There's more studies on them. And these are all the categories that I cover. Certainly heavy in the energies. It's very popular. The metals you know are popular. All the major stock indices, and of course the big spiders. One of the things, if you have ideas that you'd like me to cover, just let me know. I add that to it. So as we put it all together, the idea here is what? Trade ideas. That's what this is about. How do you get this? It's simple. If you go to our website, www.iraepstein.com, and you go to the research area on the top, that's where all the info on it is. It is $8.95 for the first 30 days. Folks, it's a tick in most of the markets. $16 every 30 days thereafter, and we will offer a yearly number down the road here. How do you get it? Again, go right there. If you have questions on it, call my staff. They are picking up the phones. We have everything call forwarded. I'm Ira Epstein. You have a great day. I'll see you this afternoon with our end of the day market wrap-ups.